Hi everyone, Buyer's Agent Jay Pace here for Providence Property Group with a market update for the month that was November 2022. So I have an early Christmas present for you, a little insider tip that I wanted to share with my fellow property hunters. In November, realestate.com.au added a new category to its filters. The new category is sold date. Now this category is incredibly helpful when researching an area. When trying to obtain a better understanding of the current market environment, we only want to really look at properties that have sold within the last 6 months. If it's a hot market, I would probably only look at stuff that's sold within the last 3 months. The big mistake that we see most people make when they start searching for properties is that they focus on what's for sale. I don't want you to worry about what's for sale. I want you to worry about what has sold and what those prices were. Now, I find that the map view is actually the most efficient way for me to familiarize myself with an area. However, the problem that I had prior to this update was that I'd be presented with properties that were sold sometimes more than even a decade ago. And you can see there's one here from 2017 there. Is it 2017? Yeah, 2017 that you can see there in Concord. And I don't need that information. That data is too old. But this can also create problems when you're first starting to look for property because it looks like plenty of sold, like there's plenty of properties on the market. It's not. These are old stock. Think of it as looking at gravestones. These are dead properties. They're not available for you. All right. Now, as you can see, when I update the filter, the same image area of the map updates, and the system removes all of the irrelevant and old data, leaving me with a clearer understanding of recent market activity. Now, this update will save me, I'm certain, hours. As before, I had to basically hover over and click on each one of those little dots, and then it turns grey like you can see there. And then it tells me what the information is about the sold date, the price, etc. Right now, it's great because I don't have to go through all of that. It's only giving me properties that meet that sold date criteria. Once upon a time, I was young and full of life, and now these are the things that excite me. Okay, another helpful website is sqmresearch.com.au. I like to use their vacancy graphs to understand demand better in an area. If you have a little look at this chart here, you'll see that the vacancy rate, and this is also for Concord, I'll just move my big head out of the way. You can see it's 1.7%, okay? Now, I've written here just a bit of a rule of thumb. Oversupply is anything really above 3%, okay? 3% is a balanced market. Anything below 3% is typically, we would classify as high demand. Okay, and we can see here for the postcode 2137 being Concord, which is what I was looking at for a client today, you can see that the vacancy rate, 1.7%, really tightly held suburb. Okay? Now today I'm going to take you through my top 6 reasons why the property market won't crash in 2023. Now this image was taken from a segment intelligently dubbed Bricks and Slaughter. And this was done by the fine, upstanding journalists at 60 Minutes that ran this particular program over 2 nights in 2017. Not only were they incredibly wrong and shamelessly fear-mongering, but they were also publicly slammed after the segment aired by some of the expert guests that they interviewed who claimed that the journalists were more concerned about outlining the nightmare scenarios than the most probable outcomes. Surprise, surprise. I always say, the media is there to influence, not to educate or inform. Now, here are some of the reasons. 1, record population growth. We are inviting more people into our country every single year. Our government will be increasing their yearly intake of migrants from 160,000 to 190,000. But many economists are saying this still isn't enough and we actually need to increase the amount of immigrants we're letting into the country. Next, record low unemployment numbers. Australia's unemployment rate has fallen to 3.4%, which is being underscored by the resilience of this market we can see. And we can see that amid the record series of interest rate rises unleashed by the Reserve Bank, and people still are holding their jobs and there's actually not a lot of jobs available. Now, record low stock on the market. This is very important. And you can see here by this chart that I'm showing total listings rolling 28-day count, combined capitals. We can see right now that there are 90,766 active listings over the last 4 weeks ending 27th of November. That's currently 9.4% below the same time last year and 19.3% below the 5-year average. So you can just see that trend with those colors, starting with purple, orange, pink, red and then dark blue, you're seeing the numbers are just dropping every year. So the amount of product that's actually for sale is not a lot. Dwindling construction costs. This kind of goes into that last one that I was just showing. New home building is likely to remain subdued until around 2026. And that's definitely high interest rates, soaring inflation, ongoing labor and material shortages. They're all adding to that restriction there. Master Builders Association of Australia, so the MBA, has actually downgraded its forecast for residential construction sector and that they made earlier in this year to reflect the ongoing inflationary pressures and labor shortages. The numbers from Matuzik actually show some states have less than 4 months of supply to sustain the demand that they're going to be they're going to require during that time. So as you know, when demand is high and supply is low, what happens? Property prices go up. Record household savings. Australians have never been wealthier. Total household wealth has surged 35% since the beginning of COVID-19 pandemic. It's hit a record $14.9 trillion at the end of March this year. So that's according to the Australian Bureau of Statistics. There is record high demand for rent. And I mentioned this in a few past videos. Obviously, when there's potential instability of the market, those people that typically would leave being renters and graduate to being owner-occupiers, they're going to stay in that pool. That's going to swell. We've increased our immigration. So CoreLogic's numbers for their November house price report show that rents continued to grow at an extreme pace, and they're holding around 1% or lower. And I just told you that 3% is balanced. Anything below 3% is high demand. Use that website I just showed you. Jump on SQM. Just type in SQM vacancy. Type in your postcode for your suburb. And I'm curious, figure out what is it? Is it below 3%, above 3%? And then also track back to, let's say, March, April 2020, when we went into COVID lockdowns, and see the spike. I guarantee you it's going to be on your suburb, and I don't even know what your suburb is. But as a result, the number of capital city homes advertised for rent reached a decade low through November, and regional rental ads have not been this low since 2009. So again, lots of demand, not enough supply. So I think that I have a bit of a different attitude to the imminent property apocalypse. I think I'm a little bit more chilled and subdued. Let's talk about interest rates. Today, the RBA announced another rate rise. This is the third consecutive 0.25% increase. The new cash rate now stands at 3.1%. Since interest rates started increasing, the media has definitely found a new boogeyman. They call it the mortgage cliff. Similar to the fiscal cliff, the unemployment cliff, the recession cliff, and the immigration cliff that we've all heard about before. Google all those things I just said. It sounds like I made them up, but you'll see hundreds of articles about all four of those other cliffs. Now, you better believe it, the media loves a good cliffhanger. And it's funny to see how these articles that I just looked at before are so similar to the ones that we saw in 2020 and 2021. So you can see Aussie financial comfort hits all-time high, but savings cliff looms. And that was in 2021. What'll happen when the money's snatched back? Our looming coronavirus support cliff. Coronavirus, Australian economy could fall into a fiscal cliff in October. That was October 2020. Economist warns after deficit. Australia is 100 days from an economic cliff. Now that last one even put a date on it, but we didn't fall into a cliff on Monday, the 20th of September 2021, and it's now 541 days into the future and still no cliff. So again, these people that write these articles, I would not bet on them for anything because they are never right. Now, time for a quick history lesson. On Wednesday, the 6th of October, 2021, APRA increased the Australian Bank's loan serviceability expectation to counter rising risks in home lending. At the time, the RBA cash rate was 0.1%. I know we're all praying for those times again, but that's just because we've been spoiled. As you can see, since May 2022, the RBA has increased the cash rate to 2.85%, and now it's gone up even more from today's rate rise. However, APRA has kept their buffer of 3% points still above the loan product rate, which is a little bit crazy because interest rates have gone up so much, but they're keeping that buffer there still, which is quite interesting. Here is actually an article from earlier this year from APRA quoting that Aussie homeowners are nearly 4 years ahead of their mortgage repayments. Now, we covered this, as I said, in great detail in our April 2022 video. If you haven't seen it, jump on there and watch it. I basically go into how many Australians own an owner-occupier property versus an investment property versus people that have an owner-occupier property that have paid it off, like my parents, probably your parents, grandparents, people like me that have owned a property for quite a few years now and have probably a lower LVR, so I don't owe as much money, so my repayments aren't as crippling. People like first home buyers that are screwed when it comes to this particular time in the market. So go back and watch that video because I really do break it down with a lot of great charts. Now, unlike most people out there, I do have a crystal ball. And the most likely scenario is that APRA will reduce its buffer, allowing owners to probably shop around and look for more competitive rates with other lenders. So I think that's going to happen, thus avoiding another cliff. Now, I do think it's interesting as I'm starting to actually see signs of the media abandoning their doom and gloom stories with little hints of optimism. So I'm just going to read a couple here. Home price downturn, now more subdued. Oh, really? Isn't that interesting? Wait, let me move my head out of the way for this one. Property recovery forecast for 2023. Why Sydney prices will rise again. Sun still shines on Gold Coast property market. Properties could rise as much as 12% if interest rates start to slow down. And we all believe, if we're looking at what the analysts are saying, that interest rates are most probably going to come back by the end of the second quarter next year. Why Perth's housing market is holding firm in the face of a national downturn. And we're doing lots of purchases in Perth at the moment. It just makes sense. The rental yields are very high and the price points are very low. And we're getting 5, 6, 7, 800 square meter blocks in fantastic areas. It just makes sense. Aussie house prices close to the bottom. Wow, that's unconventional. Recession unlikely in Australia, says the IMF. Bust over. How much Brisbane house values are set to rise in 2023? So I'm starting just now to see some of these more optimistic articles, which is quite interesting. Like many people in this world, I like to make myself sound smarter by quoting dead people who were far more intelligent than I. Now, Marcus Aurelius is a famous Roman emperor and philosopher who lived around 121 AD. He has many famous quotes, but one that always runs through my head when I'm doing my work, reading articles, talking to experts is, everything that we hear is an opinion, not a fact. Everything that we see is perspective, not the truth. So in recent years, this philosophy of thinking has really served me well. It's the whole reason why I personally bought again during 2020, why I bought again in 2022, because as soon as I start seeing everybody scared, that's the best time to be buying if you have the right knowledge and understand what's going on in the markets. Now let's take a look at the winners and losers for the month. National dwelling values fell 1% in November. Now, this is the smallest monthly decline that we've seen since June. So based on the latest numbers, the median dwelling value across the nation has lost 7%, okay? Or approximately $53,400 since the peak value that was recorded in April 2022. Now, because I'm using my voice like that, it sounds like a lot. But I actually remember last year when Sydney prices were increasing by $27,000 per month, Brisbane was increasing by $18,000 per month. It's all about perspective. In 2022, housing values rocketed up by 28.6%. Sorry, that should be 2021. They rocketed up by 28.6%, adding roughly $170,000 to the value of the average dwelling. And right now, we're all freaking out and worried because it's lost 7% since April. It's only lost $53,400 as an average. But last year it did over $170,000. Again, perspective, okay? Now, this is the rolling 3-month change in dwelling values across our state capitals, and we can see further declines across the major capital cities. But I'm starting to see some bounces, okay? Which, I'm quite optimistic about. Now, if you like what you've seen here and you want to be kept in the know with the Australian property market, make sure to like and subscribe to our channel. We really appreciate it. If you'd like further education, you can download our ebooks. The links are going to be in the YouTube description below. This is going to be my last market update until February 2023. I'm going on a little bit of a holiday just from doing these videos. I'm still buying properties. From all of us here at Sydney HQ and from all of the other teams in Perth, Brisbane and Melbourne, we'd like to say Merry Christmas and Happy Holidays.